Hey, good morning, everybody, and happy Thursday. Actually, afternoon if you're in New York. Depending on where you're at, it's about 7 a.m. here in Honolulu. Interesting market day today, right? The Nasdaq, everything kind of started off a little bit, nice little steam. We had a decent labor report this morning. Uh, and then it kind of petered out a little bit, the Nasdaq and stuff. We're sticking with that spider short we talked about yesterday that we opened up a couple days ago, and we're still sticking with that Twitter short too. You can see Twitter starting to roll over, but let's pop on over and look at some of the charts. And we'll use Schwab for this one. Let me share my screen here with you, cats. You can see old Schwab here. We like this, the Street Smart Edge software, but if you, let's move that handsome guy out of the way. All right. Actually, let's put him down here in the corner. That's where they keep me during the trading day. But you can see how that Nasdaq looks like it's starting to roll over now on that year chart. It hit that top there. The spider kind of the same way. Let's go pop on over and look at the spider. That S&P 500, yeah, it's up about 1/4%, but it looks like it's starting to top a little bit. Now, this one's at an all-time high, but we think really your indicator right now is your Dow. You know, your spider's kind of hitting new highs, and it's probably based a lot on tech. Your Dow, on the other hand, after hitting that high back there in May, really can't even get over the previous high. And we popped a little Fibonacci on it, and you can see it's kind of struggling here. It's in the middle here between that 61 and the 76% range. But the big question is, why isn't this moving in tandem with the S&P 500, right? The Dow is your 30 components, and some of those are on the S&P 500, like your Apple and stuff like that. Well, look at Apple. If you take a look at Apple right now, you can see after making that run the last few days, it looks like it's petering out too, and it looks like it's petering out at tops. You go back a little bit. We had a little bit of action in the IPO market. One of the ones we thought was funniest was Krispy Kreme just reopened. For you old-time traders that remember the first round with Krispy Kreme, you might want to wait before you buy this stock. We all remember how the old one turned out. But, you know, it's just kind of an interesting day there, guys. Let's pop on over to CNBC and see what the news says. There you see that little red line there. Krispy Kreme, it opens at 16.30 after pricing at $17. That's not a good sign for you guys that might be playing the IPOs and stuff. That's not a good sign, because I think every other IPO we were just watching, I think it was you and a couple others that just IPO'd, just blow off that pricing. This one opened below it. So I'm not sure how much excitement over the old donuts are. It's still a great donut. It's just probably not much of a company. Other than that, you can see everybody's on board with that minimum tax on corporations. Nobody really cares about that. The market doesn't really care about that. The VIX is still real low. You can see it there. It's in that $15 range, 15.43 right now. It's actually really getting low, and that shows right now there's just no fear in the market. There's no worry, there's no concern over inflation, there's no concern over slowing economic growth, there's no concern over any of this stuff, global events within the country, social events, civil events, and things like that. And that's a dangerous zone. That's a dangerous area for the market to be in, especially when you think as low as the VIX is, we should have all three markets pushing to new highs, right? I mean, there's no volatility. This is your buying. According to the VIX, people aren't afraid. They're pumping money into the market. But we've got an S&P that looks like it's petering out at the top. We've got a Dow that can't even get over the previous high. And we've got a Nasdaq that's rolling over and is red already. So just an interesting day there. Trade cautiously. Like we always talk about, gang. Make sure you got a nice part of your portfolio and some great stocks. Now we know Apple hasn't been, it's been producing over the last few days, but that's one of the great stocks. It's a stock that'll consistently perform over time, deliver a great balance sheet, and also to give you that nice dividend every 3 months. Microsoft's another one. If you want to get a little tech in your portfolio with your stocks, stick with that kind of theme. We always talk about it when we do the stock of the week, which by the way, we will do one tomorrow. Right before we do the Friday crypto show. And don't forget too, it's July 4th weekend. God bless America. My opinion on that is I really don't care if the Biden administration cancels fireworks. I don't care if there's people turning their back on the flag and stuff. I'm an American. I love America. I love my fellow Americans, regardless of race, color, creed, religion, whatever. I'm not going to play that game with all these people. I'm going to celebrate. And I hope you do too. Just take a look at your life. Take a look at what's around you, your family, your loved ones. Maybe you got a spouse. I'm still looking for one. And just appreciate the great things in this country. We have freedoms, right? We have the freedom to turn our back on the flag and still be accepted. Right? Isn't that a great thing? Isn't that a great thing? It might upset you, but isn't the soul of it the great thing that you can say what you want? You can say it publicly. And maybe some people will come out at you. Maybe some people will support you, but nobody's going to throw you in the gulag. Nobody's going to take you out to a firing squad. Nobody's going to ostracize you permanently, right? God bless America. Anyways, guys, let's call it a Thursday. Like I said, tomorrow will be a big day. We'll have our weekly crypto show. Cryptos are a little bit soft today after that big run, right? Bitcoin made that move back to 36. I think it's down back to 33,000. But Ethereum, we like Ethereum's, the action on Ethereum right now. And a lot of the smaller coins had some good action too. And we'll talk more in depth about that tomorrow. We'll see how this market shakes out the rest of the day. There's still about 3 hours in the market day. So tomorrow we'll have the big morning update. We'll have the stock of the week, and then we'll have the crypto show, and then we'll kick out and we'll start our 3-day weekend and go celebrate the great country that we live in. So with that, let's call it an update. I know it's a short one today. We're still short the Twitter. We're still short the SPY. For you guys that want to play a little bit more bold in our live room, some of us took up a little short in the queues this morning. We got a big labor report coming out tomorrow. Yesterday, we had the ADP report. We felt like the big thing about that ADP report was not so much the numbers we saw yesterday, but the number that they revised from the last one. They took about 100,000 jobs off that report. And after, you remember that report, everybody was touting it as the biggest gain ever. And, you know, almost 1 million jobs and this and that. And then all of a sudden we're revising it. That number should not have that kind of fluctuations in it, that kind of a miscount, but it did. We thought that was the bigger thing. This morning, we got our labor report with our unemployment claims. They're down a little bit. Again, we've talked about this. We are now in the third quarter of 2021. We have now supposedly been reopened for almost 6 months, 2 quarters, and we're not making as big a gains. This was as simple as simply reopening an economy, and we've turned it into this I don't know, discombobulated situation, but we're not real confident. And so we'll see how those numbers come out tomorrow. Tomorrow will be your big numbers with your continuing claims and things like that, your non-farm payrolls and all that. And we'll see how we digest that, and we'll talk about it in the live show tomorrow. But like I said, right now, we've got a little short in the SPY. We've got a little short in Twitter. We've got a little short now in room, not a system play, not a big play, but on the QQQs, and we're long oil. How about oil? We've been talking about it. In fact, before we let you go, let's go take a look at oil. I got an oil chart here for you. We talked about it the last few days, right? Let's get on a year chart. This is we talked about it the last few days, right? Oil will do this. We talked about it yesterday. We said Oil will do this. It'll make a run and then it'll base and then it'll pop, right? You see it all the time. And it just did the same thing. There is no reason to believe right now that consumption won't overwhelm supply. Even if OPEC does add some supply, they're talking about 6 months from now. We've still got the United States, which is not fully reopened. We've got airlines. Look at Delta today, DAL. Really having a great day. Hawaiian Air is a double from where we called it. Love is a double from where we called it. Everything's doing really well, but the consumption and everything's not fully open. In Hawaii, we're already hitting tourism numbers from pre-pandemic, and we don't have what's usually the mainstay of our tourism business, which is the Japanese tourists. They're not even coming yet. When all this kicks in, it's going to just inflate oil, inflate oil, inflate oil. We were watching somebody yesterday on, I think it was Fox Business News, talking about what they thought about oil, where they were saying that, oh yeah, $75 is possible over the next couple months. Well, guess what? A couple months is here. We're talking triple digits in a couple months. Now, this all contributes, guys, and we're sticking with that oil play, those oil plays right now. And of course, you know, we've talked about it. We got a little play in leisure and entertainment with PEJ. We've been talking about it. You know, there's just no fear of inflation right now, but a lot of people are basing that on that 10-year bond. And the reason that 10-year bond is, and we mentioned this yesterday, the reason that 10-year bond is staying where it's staying isn't because of the market. It's not a natural event. What's happening is we are buying, as a country, our Federal Reserve is buying billions of dollars of this thing every month, and that's what's supporting it. That's why that word, that T word, scares the market so much when the Fed comes out and talks. The taper, right? Even worse, a bigger fear than than if you mention interest hikes, it doesn't scare the market like the word taper does. And that's because the market knows that your inflation indicator, the most common one used by people, it seems like, is at 10-year. Rather than looking at all the other information. But that reason that thing's under control is because we're paying for it. So at some point, the buying ends, right? Like anything else, the money dries up, or you just get into a situation. Look, the problem too is, and as we get deeper into this recovery and we don't adjust to it, there'll come a point where the Fed won't be able to raise interest rates, even if they have to, without destroying the market and hurting the economy going forward. So we'll see. We'll see. We're positioned and we're ready to go, and we'll play it day to day like we are. Other than that, guys, you guys have a great day, okay? It's Thursday. Remember, we got a 3-day weekend coming up. So let's see how these labor reports come out tomorrow. We'll hit you up with a crypto show and a stock of the week. We still haven't decided which one it is, so I don't even have a teaser for it. But the teaser is that we got a stock of the week tomorrow. So I'll see you guys tomorrow. You guys have a great, great Thursday. Enjoy the rest of the day. There's still about 3 hours left in this market, and nothing's written in stone yet. All right, gang.